Talks between the United States and Iran have broken down after 20 plus hours of negotiations. And weekend markets, Bitcoin are reacting negatively, pointing to a potential gap down on Monday. And this is where, as traders, we can be caught off guard if we are not prepared. Here's the thing, last week's rally was built on the promise, the optimism that these talks would go well and that a deal would be achieved. But it's not looking that way at the moment, as oil looks primed to spike, equities look to open lower, and the market is about to take a hit. In this video, I'm going to get you prepared for the week ahead in the broader markets, the key levels to pay attention to if we are going to get a breakdown, or if this is just a little bit more fear before we rip higher. You're going to want to stick around to the very end where I share my chart of the week, all that and more in today's video. Let's go. Starting here with the headlines, we could see that the United States and Iran failed to reach a deal after marathon talks in Pakistan. We know that the Vice President, J.D. Vance, was leading these discussions, these mediations in Islamabad. And Vance is saying that Iran is not choosing to accept the United States truce terms. And he's saying that the final and best deal from the United States is on the table. But then you have Iran saying that they are still open to continuing talks. The bad news is that we have not reached an agreement. And I think that's bad news for Iran, much more than it is bad news for the United States. So we have to watch and see if there will be a continuation of talks moving forward. And typically these things aren't resolved in one round of discussions. There's always posturing that takes place. But this is where we currently are. And when this happened, that did not engender a positive move in weekend markets. And this was the second headline that caused probably more pressure downside on stocks here on Sunday morning. Trump claims that the United States will close the Strait of Hormuz after Iran peace talks collapse. And implied in that is almost that the United States are the ones in control of the strait, which I'm not sure how Iran will take that. This is posturing in the media. And you could see here on social media some of the things that Trump has said, that the U.S. would blockade the strait, saying that the talks had failed because Iran is unwilling to give up its nuclear ambitions. While not a 100% fair, accurate representation of what's going to happen on Monday, if you look at weekend Wall Street, some of the weekend trackers of the markets in terms of how things would open if the market was opening in the current context, U.S. tech right now is down 411 points, 1.64%, and Bitcoin down about 2,000 points. So markets are not taking it well, especially after the big move higher that we saw last week whenever the 2-week ceasefire was announced. And we have to see, does this take us into a position where we gap down on Monday? And let's jump into the charts to get an idea of what is possible based on this information. We will start with the SPX, and we're going to go through all the broader markets here. But you can see we had that big, massive gapper on the news of a 2-week ceasefire. We jumped on Tuesday above the 200, above the 50, and then we continued to climb above the 100-day simple moving average. And really, not that far away from all-time highs that were set back on January 28th when we did break above 7,000. And we were only at 2.21% away from all-time highs. And we had 1, 2, 3, 4, 5, 6, 7 green days in a row here, reclaiming that 100, very strong move. And you could see the optimism that the market was feeling because there was progress being made with these talks. But now with the headlines from over this weekend, more than likely we are going to get downside pressure. We have to look at the technicals to see what is a realistic move down. What can we anticipate tomorrow? Now, here's the thing to keep in mind. This is a head on a swivel market, meaning that one tweet or one breakthrough, or that both the United States and Iran are coming back to the table, can change things right away. But for right now, we have to respond and act based on the information that we have. And so just looking, we do have the 100 right below us. We do have the 50, but we are more than likely going to drop well below those moving averages in terms of supports, because if you just look at what has happened here in past situations where we've had negative headlines as such related to the war, they've been 70 to 100 point downside moves. And so if we just measure that out here from Friday's close to 100 points, that splits the difference between the 50. Let me mark this out here. The 50 and the 200-day simple moving average. So I think there is a strong chance that we're going to at least have a gap down of 100 or more points. I would say somewhere in the range of 70 to 100 points. And then based on what comes out of information related to progress of talks, that will determine what happens from there. Meaning either buyers are going to step in and gobble up the dip, or there's going to be continuation. So I'm watching that 67.15.25 price area here on the SPX in terms of a downside move tomorrow. And again, things can either accelerate to the downside if the headlines become more negative, or we could see that bounce come in if there is some breakthrough or people are coming back to the table. Now, what we want to watch here, though, if we do head lower, we have the 10-day exponential moving average sitting right there at 66.75.64. And that is also right around where that 200-day simple moving average is at 6.662.62. That's a lot of sixes and a lot of twos. But that 200 really is going to be the more important area, because nothing good happens below the 200. We broke below that. And I did a video a while back about what happens when you get below the 200, and it's not good. Now, the time that was spent below the 200 on this recent visit was 19 days before recovering and moving above. And so when we come back down to this 200, if we do, this needs to serve as a support, because if it doesn't and we head back below the 200, you have to wonder if bulls at that point would capitulate and say, this is not a risk on environment. This is not an environment where I want to keep allocating my capital into US equities only to see them experience this volatility and get pushed lower. So there is a real danger if this 200 gives out again that we set potential new lows. And keep in mind too, that we did not set 10% correction on the SPX, even though we did on all the broader indices. So keep that in mind. So really the line in the sand for me for the bulls, and I'm going to mark this out here to watch during the week, it's going to be this 200-day simple moving average. So if we drop back down here to the 10 to the 200, and we could poke our head below it briefly, but it has to hold. If it doesn't, then there is a real danger that we are going to set some new lows. So just keep an eye on that. Those are the key levels that I'm watching there on the SPX. But just a beautiful move here by the bulls on the SPX. And really that was driven by big tech. Big tech finally started to get moving. Again, you can see that big push higher. But notice it wasn't on significant volume. That is something that stands out about the move this past week. You can see that we are still quite a ways off here from all-time highs, got back above the 100, and big tech was leading the way. We'll look at some of the Mag 9 stocks here in a second, but more of the same thing here. We're going to see big tech gap down. We're going to see it come down, and we do have support now below us. We closed here at 611.07 on Friday, and you have the 50 and you have the 200 that will act as support. Again, what I want to see on all these charts is that 200 hold if it does in fact get tested. And again, if it does not hold, then that will raise some alarm bells for big tech. Now, keep this in mind that we are going to have mega cap tech earnings starting here soon. Netflix will be reporting this week. I sometimes lump them into that group, but the following week is when we're going to start getting the big boys like your Amazon, Metas, Apples, all those. And with a positive earnings season, we can see some rocket ship moves higher. However, if this issue, if this conflict between Iran and the United States is not at least making progress, we're going to see downside move, and positive earnings or not, that's not going to be enough to override hotter inflation due to higher energy prices, and it could be lower that we go. So just keep that in mind. And also too, I put out a video about the importance of April 22nd, because that is the deadline for a deal between the US and the United States. Taking a look at the Dow Jones Industrial, it did get above its 100 there on Thursday, but gave it up on Friday, and it actually closed down below its 50. Same thing here. We want to watch the 200-day simple moving average at 468.58 if we are to come lower, and what is it going to do when it gets to that spot? Will it bounce there, or is it going to break down? And then we take a look at IWM, same concept. After finding nice support off the 200, gapped up above the 100 and the 50 and the 10, rejected near that point of control. And what we want to watch here, the 50 will be a potential bouncing spot, so 256.28, but we're going to watch this 100 here at 254.22. So I'm going to be watching this area right here. You can see that the 200 is well below that. That would be a massive move for us to get down there to the 200. That would be about 6.6%, which is a very large move for an index. So we're going to keep an eye on this 100 for now. But notice too, the last two times that IWM has come down into this area, it has bounced nicely. But let's watch that 100 as the catch point first. Now, Bitcoin, being that it is a 24/7 market, we're able to see what the response is right now for a risk on asset, and it is not good. It was experiencing a nice green Saturday. This was off of the fact that the countries were talking, the United States and Iran was talking, but you could see what happened whenever it was announced that those talks did not go well. And you can see that this is continuing to sell down even at the time that I'm recording this. Let me hop over here into a 3-minute chart, and you could just see the big move lower off of the failure of these talks. And let's just measure this out. So when this thing was peaking here off of optimism of the talks up there, 73,810.02, down to where it is now, it's almost a 3,200 point decline. So this is giving you some insight to what to expect tomorrow. So keep an eye on that. And what I was pointing out too, when I was doing my charting this weekend for my community, is that this was coming into an interesting spot because we're getting near that 100-day simple moving average, which it has not closed above. You'd have to go back to October of 2025. And that was an area I was watching to see that, hey, if we can close above that 100, that could be some confidence that we are flipping back to risk on. And notice that we've been rejected when we've gotten into this price area, and that is happening again right now. So this is not good for Bitcoin bull. And so we are setting higher lows here. And if this is going to be a double bottom, there has to be a break above that 100 in order for this to get moving. But for now, if this continues to break down, we're really just bear flagging for a drop lower. And let's just go through some of the other broader markets. Or I want to take a look at the dollar. The dollar did break down, did put in a double top pattern, did break below this higher low trend line. It is sitting on support right now. We're more than likely going to see this spike higher off of this news that we're getting. Gold, we have this upper resistance trend line, a bit of a falling wedge here, really being held back by the 50. We'll see if this one wants to come lower, because when the war kicked off between Iran and the United States, it did take a dip. Let's see if that's going to continue lower tomorrow. And then we take a look at bonds. Bonds really just stuck down in a range, sold off from the peak that they put in here recently on February 27th. And so the selling of those bonds does push that 10-year higher. We'll probably see the 10-year tick up again on Monday. And then we take a look at oil. And I pointed this out too. I kept saying to watch whenever this monthly chart, if it hits this 200 simple moving average, if it gets rejected, well, it got darn near close. And you put in this beautiful doji candle. But more than likely, we're going to see this thing push back up. I did not set up a short here on this yet. I said if it does get back up there and touch that 200 on the monthly, I would set up a short. So I am going to be watching that to do that this week, because I don't think that this spike will last forever. So I am going to be watching it, but expect oil to push higher this coming week. And especially on Monday, we'll probably see a gap up. And the VIX, which started to break down, it broke below its higher lows. It's now below the 100, is coming down to the 200. We're going to see the VIX spike tomorrow. That's going to happen unless something miraculous happens before the market opens or before futures open. Expect another spike here on the VIX. And then the MOVE index. So that's a look at the broader markets. Again, be prepared for that downside move. I talked to you guys about those key levels. That 200 is going to be an important level to watch. Keep in mind that April 22nd is going to be the decision day for the United States and Iran to finalize a deal, or things are about to go crazier. But that 200 has to hold for the bulls, or it could get pretty ugly and we potentially could set some new lows. All right, so let's jump into some individual tickers here. Starting with Tesla, we have this trend line on Tesla going all the way back to, this is April of 2024. And you can see every time that it's hit this area, it has bounced higher. The unique thing right now about Tesla is the fact that SpaceX is going to be IPOing sometime in June, apparently, and money might be coming out of Tesla and getting prepared to rotate into SpaceX, because how many people want to actually have money in two Elon Musk companies, especially when SpaceX is going to be that shiny new penny. And notice what we got here on Friday on Tesla. We did get a death cross. You did get a little bit of a bounce off of this trend line. So just keep an eye on this one. If it wants to head lower, it did fill those September gaps, but it's not looking strong. I did have a little tiny winner day trade on Tesla on Friday. So I'm going to continue to watch this one because it is near historical support here. It has filled some gaps, so we can get some moves, but I'll be watching this both to the upside and to the downside and keep an eye on that death cross. HIMS is another chart that I'm really interested in because we're seeing that there is a trend line here that is pinning the price. And right now you can see the price is stuck to this 50-day simple moving average, which to me, it just looks locked in. But if it can break above that, if it can get a nice, solid, strong close with some good volume, you do have room on this one up to 27.43. Now, tickers like this are going to take a hit with intensification of the conflict between the United States and Iran. So it's not time to do anything with this one just yet, but I am going to watch it to see if there is an eventual opportunity here to the upside. But there is a very real chance that it will come down and fill this gap first before it decides to move higher. And then you have Netflix, that great move off of the deal following through with acquiring Paramount, and a nice strong move that happened last week. We are getting near that 200-day simple moving average. You can see there's an unfilled gap at 107.64, and we are heading into overbought territory ahead of earnings this week. So let's see what this one wants to do. A strong report could gap this thing higher, but again, the macro is going to weigh down on stocks. And let's see if this one wants to get a little bit of a retest ahead of earnings and then make its move based on how it reports. So I am watching Tesla, HIMS, and Netflix for day trades this week. And those are the charts that I'm keeping an eye on. So let's head into the rest of the Mag 9 here. You can see that Apple found nice support off the 200, bounced. Right now is facing resistance here on the 50-day simple moving average. It cannot get above that. It has not been above the 50. You'd have to go back to February 26th when all this started with the war. So more than likely, this thing is going to come back down. That's a beautiful hammer here, by the way. On April 7th, it came in on Apple. And on the weekly, actually, that is one beautiful hammer there as well. But it is still putting in lower highs. So more than likely, this thing will come down. And let's see if it wants to test that 200 again. And let's see if buyers step in. Amazon. Keep an eye on Amazon. Whenever it gets overbought like this, it doesn't stay here very long. You could just go back in time and see that. So after this big move higher, this one probably will come down. And again, the 200 sitting right there. Let's see what it does at the 200. But more than likely, it will give some of that back here tomorrow. And then you have Broadcom, a big, beautiful move higher here. It does have this overhead gap to fill around 394.21. It looks like it's going to do that. But again, with the weakness coming in from the macro that we're going to anticipate on Monday, this one probably will come back down and retest and watch for that 100 to be the bouncing spot. Taking a look at Google, we still do have a head and shoulders in play here. You could see left shoulder, head, right shoulder. What would invalidate this is if a new all-time high set and wants to push up. More than likely, this one will come down as a result of the macro weakness tomorrow. So let's see where we open. You do have the 50 and the 10 there as immediate supports. So let's see if a bounce will come in at those spots. And then you have Meta, who announced that their new AI model is ready. And that finally gave a little bit of a positive boost here to the stock. But notice that 50 and the 100 are still holding this ticker back. You have a lot overhead for this thing to overcome. And with the macro weakness, this one will probably drop down, retest the 10 here before doing anything. So again, a lot of these stocks you can see are going to be dependent on what is happening with the macro. And then you have Microsoft, which will be reporting earnings on April 29th. And I told my community a couple times throughout the year, I'll take an out of the money call option play on a stock that is beat up heading into earnings that I feel has an opportunity to make a push. Very low risk, doesn't require a lot of capital, but I am going to look for some call options with a strike price of $420 for either May or June on Microsoft. If I can get a nice big down day, there is one, no, all the gaps actually were filled on this one, but the lows from last year's tariff weakness is 345.17. If I can get it down at that area, I will be looking for some out of the money calls for an upside play. And I'm willing to take that risk and lose whatever I put into that trade, but I just like the risk to reward and how beat down this thing is. Even though it is part of the software sector, which has just been absolutely pummeled and no relief in sight, it looks like, for that thing. And then you take a look here at NVIDIA. Look at the convergence of all of these moving averages, right? So there's a lot of support here. Now, interestingly enough, tomorrow, with all this weakness coming in from the macro, we could see this thing get pushed down below all of them because they are so tight. I'm interested to see how this thing opens. If that 10 can hold it, let's see, that would be about a $9 gap down. But these supports should hold. And just look at how sideways, look at how much compression there's been here on NVIDIA. A lot of people are pointing out that there's a head and shoulders pattern here. But to me, this just looks like sideways compression that will resolve to the upside. But we still have a lot of time before we can figure out what's going to happen here. And then into some other tickers here for members of my community. So this is for Paulo. He has been trading fly very successfully here recently, but just if you're looking on the daily, you got this big double bottom pattern here. And this thing has been getting a lot of love off of the attention that space has been getting. It's actually IPO, and we definitely want to watch that 45.40 as the next area for the gap to fill here. But again, look for a little bit of a retest based off of what's going to happen with this macro weakness. And then Disney, which this thing is just completely beat up, but you do have an inverted head and shoulders here. It is starting to show some signs of life, does have room up here to the 50 at 102.08. But again, we're probably going to see more weakness here to the downside before that one gets going. And then MU, we have this megaphone pattern here where it bounced off the lows. This thing, if the sentiment was going to continue bullish, I would not be surprised to see this one set a new all-time high and push to the top of that megaphone pattern. More than likely, we're going to chop around a little bit. Let's see if this thing wants to come down and retest that 100. But it has had a nice recovery after the push lower and off of the news of the ceasefire. And taking a look at a few more here. This one goes out to Ben, who is trading Rivian. You do have a little bit of a falling wedge pattern here, but this thing has just been chopping so much. Every time that it tries to press up, it is getting rejected off this upper trend line resistance here. You do have room up to the 100. But again, a company like Rivian, it really taking a hit with the macros weak as it is, and with inflation being a risk to the upside. And really for a short, there are all these moving averages here. You have the 50, the 10, the 200. So you can't, it's so tough for this to just drop and waterfall and cascade. What you could watch is if you get a nice setup when you shift over into the 3-minute and you somehow break below that 200, is if you can come down to the bottom of this falling wedge and try to catch a nice short there. So there could be some opportunity, but this one just really chopping for right now. And that falling wedge, which typically resolve to the upside, does not look ready to do that, especially if the macro is not going to participate. And then APLD, I did an earnings preview on this one, and I talked about how this one was probably going to head down, and it did slightly, not too much. It got rejected to the downside. Again, this one will probably get more pressure off of the macro. You can see the bearish volume stepping up here, and we're probably going to get more chop and slot between the 200, the 50, and the 100 before this one decides to do anything. And taking a look at AT&T, this one's in an interesting spot. Ironically enough, this one has moved higher when the war has gotten worse. And so double top pattern, this thing dropped, found support off the 100. I would not be surprised to see this one gap up tomorrow because it has gotten love whenever the war has intensified. I'll be watching to see if that is the case here on Monday morning. And let's go through a few more. Robinhood just continues to do absolutely nothing. It did push up and test the 50 simple moving average on the daily, and it got to a high of 70. Let's see, what was that? Around 77, 79, and then just got rejected. And the 10 held a little bit on Thursday, but down it went. This one looks like there's more downside ahead, like it's going to continue to drip lower. And until Bitcoin and risk on comes back on and you have flows starting to come back into the crypto space, we're probably going to see Robinhood continue to struggle and just chop around, build out a base. So it's not time yet on Robinhood. Every time that it tries to do something, it's just doing a whole lot of nothing. And let's take a look at a few more. SMCI. This thing, accounting fraud, smuggling chips to China, no problem. Look at this thing. After that big gap down, big strong bull candle here on Friday, will it fill its gap? Probably not off of the macro, but it's amazing that this thing just still continues to attract investors and buyers to push this thing up. So there's life here after all on SMCI. And let's take a look at a few more before we close this out. So this is Enphase Energy. Man, look at this one. This thing had an all-time high of 339.65. This chart's for PAM, by the way. And look how far down this one is. Again, lower highs. This thing tried to push here back in February, but just got beat up back down. This is a long-term story. If you're looking to get into this one, there doesn't look to be any type of recovery coming for this one soon. So this could be one you're just buying and holding if you believe in the company and have conviction. But this is clearly in a bearish trend, and there's nothing that looks good about this chart. If you are going to try and get into this, see if it'll retest these lows from last November at 25.73, and potentially that could be a place to grab some shares. But in terms of day trading this one, it's to the downside because it is in a strong bearish trend. And then taking a look at Carvana, after this big double top that played out, this thing dropped, based, built a double bottom, popped, and found some resistance here off of the 50-day simple moving average. You did have a death cross that came into play here. And what is going to happen now? And if you just zoom out a little bit, I was pointing this out that there is a little bit of a potential head and shoulders pattern that could be forming here. So let's see if this one wants to push up into the 200 and then roll over. But more than likely, the macro will send this thing down tomorrow off of the news. And then we have Charter Communications. This is an interesting chart. This one's for Jason, but you could see the big move down. Really started last May, this big gap down here, and it just got crushed. I mean, down to $180 some from this high here of 437.62. Bearish trend, but it has since tried to make a bit of a comeback. This chart reminds me of UNH a little bit, and really has just been stuck to that 50. You do have the 100 below it. And you do have a bit of an inverted head and shoulders pattern here. So this one is interesting to watch. Thin volume up here to the 200, possibly even above it. So going to watch Charter Communications to see, hey, maybe a potential swing trade opportunity on this one. And then the big banks are going to be reporting this week. Here's PNC above all of its moving averages. Again, let's see if there's pressure to the downside because of the macro tomorrow. But the suspense here, right at these big, large volume nodes on the visible range volume profile, can it push back up? They are going to be reporting on Wednesday. Nice rebound here, bounced off the 200. Again, it's all going to be dependent on the macro. And then you take a look at American Express. You did get a death cross here on this guy on March 20th. It did gap up off of the positive news, rejected off the 50. And the last time that this happened last year off of the tariff noise with the death cross, you could see that it did have a positive response and moved higher. So let's see what this reports on earnings. That's going to be on Thursday, the 23rd. So that's 2 weeks away. But more than likely, there's going to be some resistance and a rejection here off of that 50-day simple moving average. And so the one chart that I wanted to bring up to you guys that I found very interesting, and it's a company that has been just pummeled here as of late, that's going to be Adobe. And I want to shift over here to the monthly time frame to show you that even though that this seems like a huge move down, 68.3% from all-time highs, that's not the biggest move down that I was able to locate. And if you actually go back to 2000 and think of the dot-com bubble, this thing dropped 81%, right? And it just got destroyed, but it did recover and it did start to move higher. And you can see there have been multiple times when this thing has dropped over 65%. So 67.53% here in 2009. And in 1998, 68.3%. But the stock has gone on to recover. And by no means does this mean that Adobe is going to just miraculously come back up to all-time highs. But I'm sharing this chart because it has experienced tumultuous moments like this in the past, and they have since recovered. Now, the big question with Adobe and other software stocks is software dead as a result of AI? And that's the big question that needs to be answered here. And also see too, that it is sitting right near this 200 simple moving average on the monthly. We know that nothing good happens here on the 200 on the monthly, but the 200 on anything, and the monthly is strong. And you can see that this bear volume is picking up. So couple things here. Why I wanted to share this is even though Adobe is down 68.3%, those of you saying that it can't come lower, it absolutely can. And it did so back in the 2000s when it was down 81%. So just keep that in mind. But also too, there can be a recovery. It might take a while. So just want you to have that perspective when looking at the Adobe chart. Last thing that I want to bring up here is going to be the data for this coming week. We could see that it's a pretty light week for data. We are going to have existing home sales on Monday, April 13th. That will drop at 10 a.m. And then you are going to have another inflation report on Tuesday, April 14th. And that is going to be PPI month over month. We're going to get core PPI, and more than likely those are going to come in hot because inflation is on an upswing with this war. And then from there, we are going to get some Fed speakers, but nothing crazy this week. It's a light week in terms of data. So it's really all going to be about the Iran-United States war. And then the last thing that I want to share with you guys is earnings for this week. I love earnings, and this is a huge week because we're going to get all the big banks reporting. Goldman Sachs on Monday, JP Morgan and Chase on Tuesday, BlackRock, Citigroup, Wells Fargo. It is going to be awesome. I can't wait. And I just want to hear what they have to say about the state of banking, the health of banking, if they talk anything about private credit. So I'm going to be paying attention to all these guys, Morgan Stanley, Bank of America, PNC. This will have an impact on how the market moves. When you have strong financials, strong reports, strong forward guidance, that does tend to lift the market. So pay attention to how these guys report and what their forward guidance is. But outside of that, the tickers that I am interested in seeing how they report, ASML, that's going to be related to chip fabrication. Taiwan Semiconductors is going to be another huge one related to the AI space. I'm going to be watching that. And the most important one that I'm most excited about is going to be Netflix at market close. I will have an earnings preview video for this one. Can't wait. This really kicks off the whole process, and Netflix is in a space where it can really get running, but the macro has to participate. So I love earnings. This is going to be a fun week, and it's only going to get better as time goes on, but I'm watching these guys during the week of April 13th. So there you have it. This is going to be another tumultuous, crazy, explosive week in the markets. Monitor what is happening between the United States and Iran, if there are going to be continued talks, or if talks are over and that's it. There's no more diplomacy and we're going back into attacks. There's going to be escalation. That's going to dictate where we are heading. This coming week and in the weeks that follow. And also keep in mind, April 22nd is that drop dead date for a deal to be done. And if a deal does get completed, you will see the markets rip back higher. But for now, what has to happen? That 200 has to hold. If it doesn't, it will not be good for the bulls. Let me know down in the comments below, what is going to happen this week? Do you think we are heading lower? Are we coming down below the 200, or will the bulls step back in? And this is just all posturing and putting on a show for the world here on the public stage between these countries. Smash that subscribe button. And while you're at it, check out the video here about April 22nd and why it is so important. And I'll see you back here for next week's Sunday setup. Make it a great day, honor the moment, and most importantly, be grateful. Take care, everyone.